Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 12th of April. Bank of Canada meeting. Still dovish despite progress in economic data? Today, all eyes will be on the Bank of Canada rate decision. Expectations are for the bank to remain on hold once again. The bank has maintained a concerned tone recently. At the press conference following the January gathering, Governor Poulos unexpectedly said that another rate cut remains on the table, while in the latest policy statement, the bank hinted that there are still significant uncertainties weighing on the outlook for exports. The bank has previously stressed that the strength of the Canadian dollar is posing challenges to that outlook. Even though the economic data have improved somewhat since the latest meeting, particularly with regards to economic growth, we doubt that this is enough to lead to a material change in the official's dovish rhetoric. Thus, our view is that the bank will probably remain on hold once again, but will likely keep the door open for a near-term cut if needed. By providing dovish hints and essentially talking down the currency, the bank can ensure that Canada's exports remain competitive. It is also worth noting that this meeting includes a press conference as well, so even if the statement has a more or less neutral tone, we could still get some concerned comments from Governor Poulos. Such signals could bring the Canadian dollar under selling interest. USD CAD declined somewhat yesterday after finding resistance near the 1.3360 hurdle. Any dovish signals from the Bank of Canada today could be the trigger for another test near the 1.3360 barrier, where a clear break could pave the way towards the 1.34 territory. Safe havens rally as geopolitical risks take center stage. Investors sought the shelter of safe haven assets yesterday amid rising geopolitical tensions in the Korean peninsula. Both the yen and gold rallied after North Korea warned the US of a nuclear attack if it is provoked, as a response to the US sending military ships to the region. President Trump replied via Twitter that North Korea is looking for trouble, and that if China does not help, then the US will solve the problem alone. Should these geopolitical uncertainties remain in the market spotlight or even escalate further in coming days, investors could stay in a risk-averse mood, in our view. Safe havens such as the yen and gold could extend their recent gains. In particular, we would expect the yen to strengthen further against the euro, bearing in mind that the first round of the French elections and the Le Pen risk are just around the corner. Meanwhile, stocks and risk-sensitive currencies like the Australian dollar and the New Zealand dollar may continue to underperform as market participants avoid risky assets. As for the rest of today's highlights, during the European day, the economic calendar is light. The only noteworthy data we get are UK employment figures for February. The forecasts for the unemployment rate to have held steady, while average weekly earnings are expected to have risen at the same pace as previously. However, earnings excluding bonuses, which the Bank of England has signaled that it pays a lot of attention to, are expected to have slowed. We think that something like that could confirm the bank's concerns that the real income growth in the UK is headed for a slowdown, especially as inflation is expected to accelerate further in coming months. As a result, this employment data could curb even further speculation regarding a tightening move by the Bank of England, and thereby reverse some of sterling's latest gains. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.